Why do you feel like this is the time that you can start legging into markets?
Thank you, Dom, and good morning. I think, we can be comfortable, but not too comfortable. This 2-day rally, as you mentioned, is something that is, welcomed, but I don't think it's going to sustain, especially if you look at Q4 trends and maybe Q1. But as you were mentioning, investors can start getting comfortable because we've talked about a lot what's going on with, obviously, Fed policy. And I think that a few reasons why investors should look closely at the data that the Fed is going to be, obviously tearing over is expectations for inflation, obviously job market. And some of those are showing signs of potentially making a turn, maybe a quarter or two out after more data comes out, obviously lagging data. So investors can look at that. They can also look at valuation on the S&P 500. If you look at forward PE being about 15 times over the past few years, that's obviously below what we've really seen. So you can get comfortable legging into the market at those levels, and especially if you're looking at some of the companies that have, especially growth and tech, some of the areas that we hold, obviously, that have been really, really devalued. There's some opportunities there for investors as well.
Delano, one of the things that we've been noticing here, me specifically, is that, over the course of the last 10, 12 years, the consensus trade on any pullback has always been to buy mega cap technology or technology adjacent type companies. We've mentioned over the last couple of weeks here that we've seen Microsoft and Alphabet, the parent company of Google, heading towards 52-week lows. Those are among some of the stocks that have seen the biggest gains over the last 2 days as the market has bounced. Do you believe that big tech trade is still in play? Should you be buying given the weakness that we've seen? Or is this something where interest rates going higher is just going to really take a lot of the steam away from that trade in the future?
I think the trade is going to be there still in the future. I think in the short term, as you mentioned, interest rates going higher. The stocks have already been beaten up. They've been going towards their 52-week lows. Even with this 2-day rally, the Nasdaq is still off around 30%, I believe. And so I think, those trades will be fine in the long term. And I think a few of those reasons you mentioned with big tech, you're getting some situations, dividend yield, you're getting some in all situations, good, strong cash flow. And you're getting companies that I think are deflationary in the long term for, if you look at something like Tesla and things that will happen in the future. So I still like that trade. As you mentioned, over the past 10 years, it's always been the growth trade is outpaced the value trade, and it's outside of, what's happened recently. That's been the trade. And I still think that's the trade going forward. And that's why we're overweight many of those companies.
So what then is on the shopping list then? Where are these opportunities with the Nasdaq down 30-some%, the S&P kind of in this bear market zone that we've been hanging out in for a while? What is it? Energy? Is it those tech stocks we talked about? Are there places in other staples companies, even though they may be in some cases more expensive on an earnings basis, given that people have been pouring into them for the past several months?
Yep, and we hold a little bit of energy, obviously underweight relative to what other things we hold. And I think the people that have been holding energy obviously have been winning all of 2022, 2021, and have actually had great gains from that. So I think going forward, you can kind of tier it out. Yes, as you mentioned, staples, healthcare, those are great areas to be in for investors. I do think when you see big legs down, when you saw what Tesla dropped on delivery, those are opportunities for investors. They believe in those assets long term to buy, but it's kind of tearing it down. I think you would take, investors should look at big legs down and growth and tech companies, as well as sticking with their staples, sticking with consumer staples. We realize that the Fed is still going to be on their pace for the next couple of quarters, as well as just the general economy is going to be pulling back the next couple of quarters. So those are areas for investors to be in.